All right. Hello, everybody. Welcome back to another episode of The Market Close. We are live. It is Monday, November 10th. And folks, we went green. We went green. Oh boy, did we go green. S&P 500, 681.95. We were barely pushing 677 this morning. And we were bouncing around 655 to 677. Now we are well above 680, at least at, pushing 682, and every dollar on the S&P really does matter. So seeing that hit above 680 is really nice to see. That's one of the core levels I talked about this morning. If we can get above 680 and then close above 680, we're up $10 on the day, up 1.62%. And that's causing everything to have some fun. SoFi, what a day. It was up 10% at one point. Right now, 8.84. I think if you are a SoFi shareholder, you will take it. You got SoFi right there. Looks like it's going to get that close above 30.50. Grab right there up 6%. Google up 4%, 290. 4% on a $3.2 trillion company is a big deal. NVIDIA pushing 200, up $11. That's up 6%. Palantir 9% on the day at 193. That's a $16 rebound. Robinhood right here at 137 again. S&P at 681. Meta's up 2%. Amazon's up 2%. Salesforce up 0.5%. Even Reddit's up 6%. Apple's up 1/3%. SMCI's up 2%. Bitcoin and Ethereum relatively flat. Ethereum right there at 3,500. Bitcoin at 106. Bitcoin at least above that 104 level it was at in the morning. And that's why BMNR right here is at 41.72, up 3%. But it is very, very, very nice to see that we are getting a green rebound. And now the number one question I think people are having are, why are we getting that green rebound? And obviously, there's two main answers. Number one is the shutdown has not officially come to an end, but in the next 3 days, it should likely come to an end. We got that Senate procedural vote yesterday. That's what the market really cared about. And then number two, you've got potentially a little bit of less fear around the nature of this AI trade. And there are some headlines we'll talk about for why that fear is potentially going down. There's also some headlines for why that fear could be going up. One of those headlines being from Michael Burry, who actually tweeted and called out some companies for the first time in a couple of years, specifically Meta, Oracle, and NVIDIA, saying that they have understated their depreciation, which has allowed them to overstate their earnings. And then he's saying, stay tuned for November 25th because things get worse. Don't know what that means. Is he launching a book? Is he putting up more analysis? But nonetheless, you have that headline there. Even that headline has not stopped the two big positions that he has a massive bearish bet against, Palantir and NVIDIA, from going down. Palantir right there up 9% on the day, and then NVIDIA up 6.2%. Again, he does have close to $1 billion notional put position on these two companies. You're not seeing that type of pain. Now, it's not happening to the entirety of the market because you are getting some pain in a variety of areas. First of all, the earnings that we have today, Big Bear AI, Riggeti, Rocketlab, Asts, TeraWealth, Plug, and Oxy. The only one that I own out of these names are Rocketlab. So we're going to get all those earnings after the bell, and I'll put a poll right here in the chat on which one people think will outperform. But the data center plays haven't really done that well today. Honestly, I'm not sure exactly why. The only argument you can make is that there is some fear around the overall debt that these data centers or that the hyperscalers are taking on, which could be affecting all the neoclouds. Coreweave right there, basically up 1% of the day. Nebius ended up going basically flat. It was at 118, came down to 108. Now it's at 111. Mic issue. Okay, hold on. Why is the mic messing up this quickly? Okay, better, yes, better. No. With my mic, bro. Better, yes, no, good. Okay, we'll switch back to the other mic in a second. But no. Okay, give me 1 sec. Literally, give me 1 sec, and we're gonna fix it right here. We're gonna do this. Okay, let's see. Okay. Let me know if this one should be better. Nebius right there, 111. If it's not good, let me know, but that one should be better. I was saying, I don't know why the data plays are getting hit today because of the depth the hyperscalers are taking. You can see Iren right here down 3% of the day, 60.2. TeraWealth, for all of them getting hit. Not exactly sure why. Nebius and Coreweave basically flat on the day as well. Cypher down 4%. Maybe it has to do with AI hyperscaler debt. Maybe there's something else going on, but we will get one of the big neocloud earnings today after the bell with Coreweave. Again, you can see Palantir and NVIDIA going green. Coreweave not really holding up that same type of green. So the market is being a bit selective here in terms of what playing out. Getting bad again. Okay, well, let's go to Tom Lee anyway, because I was about to switch them. Let me figure out the mic issue. Here was Tom Lee this morning. and or this afternoon, like 10 minutes ago. Here's what he had to say about the markets. Let me pull this up. Why is the mic being weird right at the end of the day? Yes, Coreweave does. Mic is fine. Oh, don't tell me you guys were troubling. Okay, well, we'll go to Tom Lee anyway, and then we'll be back. Trump is live right now as well, and so we'll probably get some quotes from Trump in a second as we get into earnings.
NBC contributor trade says today. Am I right?
Yeah, I think there's a certain measure of relief because the shutdown robbed us of visibility on the macro data, and of course, there's economic hit and there's suffering because, air traffic is slowing. So I think for many reasons, I think this shutdown was a problem for investors.
So what about now between, now and the end of the year? It's the AI trade that really seems to be debated. How do you feel about it heading into this final stretch?
I think it's still in really good shape fundamentally. We know there's a lot of visibility for AI spending, and we know there's still innovation and gain of function taking place with the models. So to me, it makes sense that there's still a payoff coming. I think one of the issues that investors are going to grapple with is even though they may say AI stocks are expensive, NVIDIA still only trades at 29 times forward earnings. I mean, it's still cheaper than Costco, so it's hardly a bubble valuation.
No, but I don't think when they talk about the valuation of AI stocks, they're necessarily talking about NVIDIA. I think you would agree with me on that. They're more so talking about names like Palantir and some others where you could easily say, yes, their earnings have been great and the story's incredible, but at some point you're only willing to pay X for a stock, and maybe that one's gotten a little bit too rich. Using that as an example of the kind of names they're talking about.
Yeah, I mean, I think Palantir is an example of what they call like an N equals one company. You've got a founder-led business developing products that really seem like magic for the companies that adopt it. So, should this just be getting a softer multiple? I don't think so. And Palantir's opening up so many markets, and if it was a venture capital firm, they'd be getting, potential carry for how they transform businesses. So to me, I think that this is still a market discovering how to define the valuation model for Palantir. But to me, that doesn't mean it's a bubble. People would have said that about Tesla in 2018 because it looked incredibly expensive, and the stock in Tesla has been a huge performer since then.
But what was last week about then, do you think, at its heart?
Well, I think at the heart is the market wobbles, and so when the market wobbles, two things. One is they start to take shots at the leaders, right? Because they try to take down the leaders, thinking that's what leads us down. But the second, it really highlights the grim reality that we're about to have a third year of double-digit gains. The S&P's up 80% over the past 3 years, and funds are measured on 3-year performance. Only 21% of fund managers are beating 80% over that 3-year period. It is one of the worst ever periods for fund managers, and so they'd rather see the market fall so that it falls to their performance level. I think what's more likely, of course, is the market follows a seasonal pattern, which means there's going to be a lot of chasing into year end.
Don't you?
Okay, so we'll finish up with Tom Lee after the bell and we get through earnings, but kind of a couple core arguments he made. Number one, market wobbles. It is what it is. Basically he said, hey, stocks go up, stocks go down, and this is just one thing that everyone has to get used to. And quite frankly, there wasn't a lot of reasons for why the market took as bad of a downturn as it did last week. All of us were trying to figure out exactly what the reason was, and none of us really had that sort of core headline until the shutdown potentially being reversed caused the V-shape on Friday, which then made it very clear that the market cares so much about the shutdown. And that's what Tom Lee talked about as well as one of the bigger issues. In terms of Palantir, I thought what he said was also really important, essentially saying that Palantir is a N of one company and that their products are like magic for the companies that use them. Basically saying you could have said the same argument about Tesla when it was worth $50 billion back in 2018, that was egregiously overvalued and expensive. And it was expensive, just like Palantir is expensive right now. But that doesn't mean it's a bubble. And at its core, he's basically highlighting Palantir as a core winner in the AI space, which, the bulls believe that it will continue to put up the growth to be able to get the valuation it deserves. And the bears think that the valuation is egregious. One of them is going to be right now. Obviously, the market is siding on Palantir. Also, this $16, 8% rebound. Don't tell me that's all retail today on Palantir and NVIDIA. This is obviously bigger money that's stepping in after the shutdown. That's happy to start reallocating to equities, which goes to Tom Lee's third point, which is that only 23% of fund managers are meeting their benchmarks, which means they'd rather see the market go down so they can catch up to their performance. If the market doesn't go down, they have to chase. As a institutional money manager, you have a fiduciary duty to be able to beat the S&P 500. And if you're not at this point, then there might be some chasing that's going on right here. So if the shutdown reversing was the catalyst to get big money to be excited, again, maybe everything we're seeing today is all retail. Maybe SoFi up 8% is pure retail. But if it's not, which I would think it's not, then you have a lot more money coming into the system. Trump is talking right now. I'm getting a bunch of headlines from Trump. Again, we got a lot of earnings. I put the Coreweave pumper dump. Most of you guys are thinking Rocketlab's going to outperform every other company that's reporting today. 62% of you say Coreweave is going to be a pump. Let me know if anyone owns any of these names. Big Bear AI, Street's expecting a loss of 7 cents and 31 million in revenue. Riggeti, Street's expecting a loss of 6 cents and 2.1 million in revenue. Coreweave, Street's expecting 51 cents of a loss and 1.28 billion in revenue. I don't think Coreweave's going to be profitable. If they end up being profitable, I think that would be really good for the stock. Maybe this is not the quarter for it, but that's what the Street's expecting. Then Rocketlab, Street's expecting 10 cents of a loss, 151 million of revenue. Asts, Street's expecting 27 cents of a loss and 22 million in revenue. And then for Plug, Street's expecting 13 cents and 176 million in revenue. Oxy, Street's expecting 49 cents, 6.74 billion in revenue. I think Rocketlab, Asts, and Coreweave are the main names that most people here own. And so we're going to get those earnings in the next couple minutes. In terms of Trump, okay, so a couple things. Number one, he said we're making a deal with India. It's different to the one that we had in the past, and we are getting close to that deal. And then on NVIDIA, he just said something about NVIDIA as well. Again, he's taking questions. I'm not sure why he's live, but he's at the Q&A portion of being live. And so you're getting a lot of different quotes. On the shutdown, he says the deal is very good. We want healthcare where we pay money to people and not healthcare companies. We will be bringing tariffs down for India. We will issue a dividend to middle and lower income people of $2,000 thanks to tariffs. He keeps using the word dividend. I'm not sure if that means a stimmy check or if that's like this baked in tax credit or something, but we'll get the clip in a second and see exactly what he says. And then he said national security would be in a disaster if the court rules against the tariffs. I don't have the exact quote on NVIDIA yet, if there is a quote, but those are the quotes so far that I have from Trump. There you go. That's what we got on Trump, and we're going to get earnings in about 5 minutes and see what we got. I see a lot of people here owning Big Bear, Rocketlab, Coreweave, and Asts. A little bit of Wolf. I own Rocketlab. I have 2,500 shares, $26 average. I don't care if it goes down. It'll get me a chance to buy more. If it goes up, that's great. So really not that nervous. I know a lot of people are heavier in some of those names than myself, but I mean, for a company like Rocketlab, I think they're just so early in their journey. Neutron is going to be such an important thing next year. So, I mean, if we do get a dip, I would not hesitate to buy more if we get to a good price. So that's what we got. And we're going to get these numbers pretty soon in the next 20 seconds as we get into earnings. We got real Matt money. Matt, are you streaming the Rocketlab call or not? Because I think I'm going to stream Coreweave. So if you're streaming it, I'll send people to your channel for Rocketlab. And we'll get those earnings as we get into the close. All right. Thank you, everybody, for being here. Monday, November 10th, 4 p.m. The stock market is now closed. All right. Markets are closed. And we got a green day to end out the markets. Not so dumb, Jack. Thank you for the $50 super chat and bit. Thanks for keeping us calm in the storm, brother. Deeply appreciate you, man. Thank you for being here, and thank you for the $50 super chat. Matt says he's doing the call 15 minutes after the close. Okay, so I'm going to put Matt's link in the chat whenever he goes live. And for those that care about Rocketlab, you can head over to Matt's stream, and he will be listening into the call. I think we get the. Do we get the numbers at 4:15 or 4 for Rocketlab? Because if we get them at 4, we can go through the numbers here. If not, then we'll see at 4:15. But I think most of these companies by 4 to 4:05, we should be getting their numbers. All right, so how do we close? We got a 1% day on the S&P. We got a 1% day on the S&P. I'm just going to go to Webull, guys, because Robinhood does not show those after-hour moves, and it's really hard to see the price action. So we're just going to go to Webull right here, and then we'll get into earnings. S&P 500, 681.40 on the day. Not too bad. That's up 1.5%. Palantir up 8.5% on the day. Oklo was actually red. Rocketlab was up about 0.5%. Papa John's got halted for a $65 buyout offer. No one knows if that's officially happening, but it did get halted. NVIDIA, 199.05. Not bad. And then you got Oracle. That was actually up 0.63%. Tesla as well, 3.6% up on the day. Coreweave, are we getting a move? It was up 1.54%, not seeing too much of a move yet. It is green, up about 1%. Open Door, by the way, great day. Open Door almost $8, up from $4.77 at the lows on Friday. So Open Door, massive day. JP Morgan did upgrade them to an $8 price. That's why the street got excited for them. Celsius was up 7% on the day. D-Wave was down about 0.5%. Duolingo continued to go down by about 4%. Zeta was up about 2% on the day. EOSC Energy was up 5%. The NASDAQ was up 2%. Webull was up 0.73%. And then AMD up 4.5% as well, which was not too bad. Coreweave right here, we are getting a little bit of a move. Nothing too crazy. ASTS is out. ASTS, you got to move down. 2.3% down. 2.3% down. Let's see if we can get these numbers. Obviously, Street doesn't like it on the first glance. We have Plug Power real quick. Let me take a look at that. Plug is down by 0.5%. Don't have their numbers. I thought I did. Let me see if I can get it again. ASTS down by 1.23. TeraWulf's dumping as well. TeraWulf, let's see again. Google invested in these guys. AI HPC play. That got an investment from a hyperscaler. They were a Bitcoin miner. TeraWulf, TeraWulf's not dumping. And now it's flat. It was down 0.5%, but nothing too crazy. Big Bear AI, don't have their numbers yet either. Okay, let me make the watch list right here on Webull. Earnings, 11:10. So we have Big Bear. We have Rocketlab, ASTS, Riggeti, Oxy, Plug, Coreweave, and Wolf. So these are the main ones we're looking at. Not really seeing any after hours action besides Rocketlab getting about a 1% move either. Plug, 177 million. That's up 13% year over year. Adjusted EPS of a loss of 12 cents. I think that's a beat on the top and the bottom. Let me confirm. But I think that is a beat. Rocketlab, do we have a move? We do not have a move. That's 1.2%. I mean, that is a move. It's not the craziest move. Yeah, Plug beat by 8% on EPS, 1% on revenue. So you got a double beat for Plug, which is good to see. The rest, I don't have any other numbers. That's it. So all we have is Plug. All right, so we're going to have to wait a little bit to see what else comes out. Oxy, that's flat. Riggeti, that's up a little bit. ASTS, it was down 2. Now it's flat, so I don't think there were numbers there, even though there was a reaction. And then same with Big Bear. Next is reporting today. Okay, I'll put them on the list. Next Decade, right? Oh, this is Map Money. Okay, so we'll put them there. They're pre-revenue though, right? So we're gonna have to see what numbers they put up. But we should be getting the rest of them soon. Is Beyond Meat today? I think Beyond Meat is today, so let's put that on the list as well. Beyond Meat is up 2% after hours, was down 3% on the day. I don't have those numbers yet. You guys are saying ASTS is out and I don't see any numbers. Let me check again if we have this. Don't have Rocketlab, that's for sure. No, I don't see ASTS. I don't see it. No, it's not out, guys. It's not. I don't know where you're looking, but from all my sources, I'm not seeing any of those numbers yet. Not yet. Beyond is at 5 p.m. Okay. So we're going to listen to Coreweave at 5 p.m. I think it's an important call to listen to just because of all the stuff going on in data centers, neoclouds, etc. And then for those that want to do Rocketlab, you can go over to Map Money. ASTS up about 1.88 after hours. Again, a lot of these moves not really showing any reaction to the earnings because the earnings aren't out. But they are getting some green. Riggeti's out. Okay, let me see. Oh, Riggeti, I got it. Oh boy, hold on. This is either good or bad based on how I'm reading it. Oh, looks bad. Okay. So they missed EPS by 933%. 62 cents of a loss versus 6 cents. And then revenue 1.94 versus 2.1. A little bit of a miss on the bottom line and definitely a miss on the top line right there. EPS is down 675% year over year. Revenue is down 18% year over year. I mean, the stock has been pretty resilient, though, so let's see where the stock is. Stock is down 2%, which, to be honest, you can't be that upset if it's down 2% after missing EPS by 900%. I would imagine this could affect all the quantum names. D-Wave, flat after hours, IO and Q. IO and Q, for some reason, was down worse than the rest of them. That one also flat after hours. I mean, you might get some people that just sell Riggeti and go into other quantum names, which actually could be a tailwind for them. Riggeti right there, 2.8% down after hours. TeraWulf, we got TeraWulf. Oh boy, well, Riggeti's earnings make TeraWulf look like some of the best earnings, or sorry, I should say TeraWulf looks like Riggeti's EPS miss look rather inconsequential. So TeraWulf missed EPS by 2,000%. Not 933%, 2,160%, $1.13 they lost versus 5 cents a share. How did the street get it that wrong? Either TeraWulf really messed up or the street doesn't understand this business for there to be a 2,000% miss on EPS. And then revenue, they missed by like a couple 100,000. That's not a big deal. Revenue is up 87% year over year. EPS is down 1,700% year over year. Like, it's got to be the street, or either TeraWulf had some horrible like accounting stuff and that messed up their earnings, or they genuinely, like, their margins are so bad and they made so much investment and that's leading to a lack of bottom line growth. But $1 versus 5 cents to what the street expected, that's kind of ridiculous. Riggeti right here down 3%. TeraWulf is also down 3%. Not too crazy for TeraWulf or Riggeti considering the size of the miss, but both of those down 3%. Yeah, 933% looks way better than a 2,000% miss. Doug says it's like the market thinks Wolf was going to move Bitcoin to an entirely new successful business in 3 months. Look, that's fair. It's just with the Iran and Cypher momentum. That's why I think a lot of people kind of expected the same thing would happen with TeraWulf. Where's Bitfarms? Bitfarms right here, back below $4 at $3.58. But, you know, TeraWulf hasn't had one of those crazy deals yet outside of the Google investment, right? They don't have it. Now it's dumping down 8%. It didn't have like a Microsoft $10 billion deal. So you do have to give this one time, but that stock right here down 6.2%. ASTS goes red. There's no numbers. TeraWulf down 6. Riggeti down 2. We should be getting Rocketlab and ASTS pretty soon. But those are your first 2 earnings of the day. Yeah, still don't have Rocketlab. Yeah, Next. Are we pumping on Next? Next is not pumping. Next is flat. Literally nothing on Next. Beyond Meat is up a little bit. Is Beyond Meat today or is it tomorrow? I think it might be tomorrow, to be honest. Beyond Meat earnings is November 10th. No, it's today. It should be today. The conference call will be tomorrow. The earnings will be today. Okay, so we'll find out soon. Coreweave, are we moving? Are we moving? We got a 2% move. 3%, 3.1. Can the green continue? 3.5. Coreweave again was at 140 a couple weeks ago. Now down to 105, so it definitely got hit. I don't know how healthy that green candle is. It's not an immediate move up, but it's trying. Coreweave right here. You guys, 62% of you said pump. 38% said dump. Coreweave numbers, let me see what we've got. Coreweave up 2.7. Third quarter revenue, 1.36 billion versus 1.29. That's a beat on revenue. A beat on EPS. Street thought they would lose 57 cents. They only lost 22 cents. That's actually really good. That's a hell of a beat. That's a beat by freaking 25% on EPS. Big Bear is up 3% after hours. Big Bear don't have the numbers yet, but that is moving. Coreweave not getting a crazy move, but they did have a pretty nice, I mean, they're 20 cents away from profitability, which has been one of the biggest concerns with this company. Coreweave right there up 4.5, Big Bear up 3%, EPS of 25%. That is a very strong beat on a capital. Dude, yeah, Coreweave's capital intensive. So for them to inch out that margin, I'd be very curious to see what they did. But it's definitely something that I think the street will be happy about. Coreweave again beat by 57% and then beat by 7% on EPS, which is what we're looking at right here. Negative 22 cents versus 51 cents expected. Next is reporting on October 30th. Okay, I'm gonna blame June for that. June, you told me Next was reporting today. You told me Next was reporting today, June. And now you made me look stupid in front of Matt Money because that's his stock. But if Next already reported, then we don't need to focus on Next. Rocketlab right there, that's flat. ASTS, that's flat. Big Bear, I don't have their numbers yet. Don't have their numbers yet. Ah, Coreweave. She's not holding it. She's not holding it. She's trying. Went down from 4%, almost went red. You can see that red candle right there. Rumble acquires Northern Data, a big data center player in the EU. Are you kidding me? Is Rumble about to get into the data center space? Oh my goodness. Rumble stock after hours, flat. It was up 11% on the day, though. I guess someone knew that they were going to announce something. Dude, Rumble legit becomes a data center play. Is every company just realizing their business models suck and they're transitioning to data centers? Is that what they're doing? Is that what's going on? Coreweave up 2%. Big Bear, still don't have the numbers yet on Big Bear. Should be getting it soon. If not, then this 2% move, I don't know what the street's reacting to if we don't have numbers on Big Bear. Yeah, TerraWolf again missed by 2,000% on EPS. Riggeti missed by 933% on EPS. Coreweave beat by 57% on EPS. Coreweave holding on to a 2% move. They tried crypto, now it's data center. Yeah, dude. I mean, the Bitcoin mining businesses obviously never worked out. But you need Bitcoin miners. It's just, you know, the public companies themselves. It's hard for them to produce a profit. Data centers, it's a lot of demand for data centers. So, I mean, I think the pivot makes sense. The question is just the quality of these companies getting into the pivot. CleanSpark got smashed today. CleanSpark, wow. Why is CleanSpark down 5% after hours? And why was it down? Well, it was down 4% in the day because Iren was down and all the other guys were down. Iren after hours is flat. Cypher after hours is flat. CleanSpark still getting hit. Did they dilute or something? That's weird for CleanSpark to be down 4%. They did an offering? Okay, of course they did. Of course they did. What's the offering? How much did they dilute by? Let's see. Let's see. 1 billion. 1 billion in convertible notes. 1 billion in convert. That's what it looks like. Yeah, just now. Literally at 4:02 p.m. they put out this press release. Due 2032, 1 billion of convertible notes. Oh my. I remember when they were a Bitcoin miner, they were doing up to 350 million. So they definitely have a lot of convertible notes on the balance sheet. CleanSpark right there down 5.3%. This one got to like 22 a week ago. But this one's still getting hit. Rocketlab, the call is at 5. I think the actual earnings should be at like now, 4:15. So we should be getting those numbers any second now. Big Bear's up 3. Don't have their numbers yet. Rocketlab, again, we should get a reaction very soon. And CleanSpark with a $1 billion offering. That's why that stock's down. Plug did a beat on the top and the bottom. Plug is up 6.3% after hours. Oh, I didn't do a Rocketlab pump or dump. Oh, let me get that in real quick. Okay, so everyone said pump on Coreweave. You're kind of getting a flat reaction. Rocketlab is not next Tuesday. It is today. Rocketlab pump or dump. Still don't have Big Bear numbers. Well, let me just go to their website, dude. Let me just go to their website. Let's see. Big Bear. Nope, not on the website. I don't know what the street's reacting to. Not on the website. Wait, is this the website? Nope. Do we got it? Yes, I got it. Okay, I think I have it. Oh boy, these, okay. So, all right. So let me know if you see a Rocketlab move, but let me get into Big Bear. Don't have the Rocketlab stuff yet. All right, Big Bear, there's a lot of stuff to read. However, revenue's down 20% year over year to 33 million. Gross margin was 22%. That's down 3% from 25.9. Net income was 2.5 million compared to a net loss last year, so they are profitable. Non-GAAP adjusted EBITDA of negative 9.4 compared to positive 900,000 last year, so they're down year over year on adjusted EBITDA. And then SG&A of 25.3, that's up 8 million year over year. Backlog of 376 million. So the company is growing negative 20% with negative or with declining margins, not negative margins, but declining margins, and negative non-GAAP adjusted EBITDA. We'll go back into the numbers, but I don't know if that's a beat or a miss. I'll look at the expectations, but those are the results from their website for Big Bear. Big Bear now is down 1.2. It was just up 3, just went red. Rocketlab, we got to move 2%. That's a candle. The candle is green. 2.9. Okay, we should be seeing more soon. 53.91. Let me see if I can get the numbers real quick. We should get it. Rocketlab. Oh, we got a double beat. Wow, Rocketlab. Oh my goodness. They beat EPS by 70%. Street thought they would lose 10 cents a share. They only lost 3 cents. I think they're getting ready for profitability. I think Rocketlab is getting ready for GAAP profitability in the very near future. Revenue, they beat by 2%. 151 was what the street expected. They came in at 155. Revenue is up 48% year over year. EPS is up 70% year over year. My goodness, you're getting a well-deserved 5% move. Now, Rocketlab did hit 70 a month ago, so I know we're not at those levels, but definitely deserves a positive earnings reaction right there, up 6%, 7% after hours on Rocketlab. ASTS going the opposite direction, down 5%. ASTS numbers. Okay, so the street expected 22 million in revenue. They came in at 14 million. I thought ASTS doesn't even do revenue. What I'm looking at says they had 14 million in revenue, which technically that's good, right? There's still some revenue, but they did miss by 33% on revenue. EPS, they missed by 67%. Street thought they would only lose 27 cents a share. They ended up losing 45 cents a share. ASTS now recovering a little bit. It was down 7. Now it's down 2. So maybe you got people coming in to buy. Rocketlab, look at that. 9% move, baby, on Rocketlab after hours, as they are very close to profitability. Big Bear just went up 7%. Looks like the street likes those numbers, even with the negative growth year over year. I'll check the expectations. I would imagine it had to be better than expectations for the street to be excited about. They also mentioned they're acquiring a company. That could also be why the street is happy about Big Bear. Yeah, Big Bear, the street thought they would lose 7 cents. They ended up losing 3. That's a 57% beat. And then revenue 33 versus 31. So even though revenue is down 20% year over year, EPS is up 50% year over year, and they beat on the top and the bottom. That's why you've got Big Bear making an 8% move after hours. It's at 621. It was at 850 last week, came all the way down to $5. So you're seeing that rebound, which is nice to see if you bought in today. That's up 9% right here after hours. Rocketlab up 7%. ASTS down 3%. Okay, I mean, look, Rocketlab and Big Bear beat on the top and the bottom. That's the bullish part. Plug Power also beat on the top and the bottom. We'll get into more of Rocketlab's earnings in a second. ASTS missed on the top and the bottom, but then again, I don't think the street tends to care that much about that. Otherwise, they wouldn't even have the valuation that they have right now. 66.50 after hours. That's down 3. Riggeti had an ugly miss, only down 2. Not that crazy. Terrible had a really ugly miss, only down 4. It goes to show how much difference a week makes, right? If all these companies reported on like Thursday last week, they might not have been able to only be down a couple percentage points, but with the S&P up 1.5% on the day, market could also be a bit more rewarding to some of these names. TeraWulf down 4%, Big Bear up 7, and Rocketlab up 7.5. Oxy, I don't have their numbers yet. We know Berkshire is a major shareholder in Oxy. Oh, we do. Oxy, they beat on EPS by 33%, 65 cents versus 49 cents expected. And then revenue, they missed inconsequentially, 6.7 versus 6.74. Revenue's down 6% year over year. EPS is down 35% year over year. Oxy's down 1% after hours. Coreweave goes red, even though I thought they had I think Coreweave and Rocketlab crushed it, dude. I think Coreweave and Rocketlab crushed it just on a earnings per share basis. Eventually these companies have to be profitable, and that really fights back against all the arguments around, these companies are frothy, they're not profitable. Well, if they're even Big Bear is only 3 cents away from profitability. It's not like Big Bear is that far away. I know revenue is declining year over year, but they are very close. I mean, you would imagine in the next at least 2 quarters, so call it Q2 26 or Q1 26, Rocketlab and Big Bear would be profitable. Coreweave does guidance on the call, or at least they do some of their spending guidance on the call. So that's why the call will be very important. I remember last time the stock was up like 10% during the call because of some good guidance they gave. But when they get to the call, we'll see what they have to say. Let's see if we can get some coverage on these names. Then we'll get to some of the Trump quotes, and then we'll go deeper into Rocketlab. But my goodness, what an earnings from Rocketlab. 3 cents away from profitability is very, Very exciting right here. We also have Paramount. Let me pull up Coreweave first, and then we'll get into Paramount, and then we'll keep going from there.
Posting 22 cents, but we're not going to compare because Coreweave, which is a GPU as a service company, provided a GAAP number. But for their revenues, they came in stronger at $1.36 billion for the quarter. Another key metric for this company is their revenue backlog, the RPOs, similar to what Oracle calls it. They are saying that they posted $55 billion in the quarter. That is up from $30 billion just last quarter. So you can see a significant increase there. In terms of guidance, we'll get that on the earnings call. And I just want to end with the non-GAAP operating margin. That came in at 16%, so higher than the street anticipated at almost 14%. This is the third quarter for this company as a publicly traded firm.
Wow. Revenue doubled in the backlog. My goodness. There is a lot of freaking demand for these GPUs. Coreweave already had a very, very healthy backlog. The fact that they said that doubled this quarter, that's pretty crazy. So let's go through Rocketlab, and then we'll read what happened on the Coreweave call, and then we'll keep going from there. Rocketlab, what do we got? Peter Beck, this past quarter, we once again delivered record revenue at $155 million at record GAAP gross margins at 37%. And a new annual launch record is just days away. With progress across major space systems and programs, record backlog of our contracts for our launch services business, and well-timed strategic M&A and growth areas that are well-aligned with next-generation defense programs like Golden Dome and the Space Development Agency's future constellations. Our momentum is strong, and we're poised to deliver long-term, exciting growth. Fourth quarter, they're guiding for $180 million, GAAP gross margins of 37 to 39. That's pretty incredible. For a hardware-intensive business like Rocketlab, to get those margins is not bad at all. Non-GAAP gross margins of 45%, OpEx of 122 to 128, EBITDA loss of 29 million, non-GAAP operating expense of 113. They're saying we expect interest income of net 3.5 million. I wonder if that gets them to at least 1 cent a share of profitability potentially, but again, 3 cents away. It looks like that can happen. And they talked about all the things that they've been able to do over the past quarter, including acquisitions and getting a lot more of those deals. Neutron likely is on the way. Updating our Neutron schedule that has a rocket arriving at Rocketlab Launch Complex 3 in Q1 2026. Wow. With the first launch thereafter pending the successful completion of the vehicle's qualification testing and acceptance program. I don't know if that means Neutron is officially ready in Q1 2026, but I think that means that it's getting set up definitely by the end of 2026 for Neutron to be good to go. Not bad. Not bad. I guess on the call, they're going to talk a lot more about Neutron, but that's what you got from Rocketlab. Incredible, incredible quarter right here. Rocketlab right here. 9%, folks. 56.78 after hours. Amazing, amazing stuff for Rocketlab. Okay, Coreweave, CEO. We've delivered an exceptional third quarter, setting new records for revenue and almost doubling our revenue backlog to more than $55 billion. Holy crap, dude. Our performance reflects disciplined execution across every part of our business, from scaling infrastructure to expanding capacity to deepening customer relationships and advancing our software and services. Coreweave's position as the essential cloud for AI has never been stronger as we drive growth through focus and innovation to power the next generation of AI. This is super bullish NVIDIA, super bullish AMD, super bullish Nebius, Iren, Cypher. I know all those companies are different, but if a company like Coreweave, which at the end of the day is a neo cloud, is able to double revenue backlog the way they're doing it, it means demand should be high. It means demand should be high. They entered into a $14.2 billion agreement with Meta. That one we talked about a while ago. They secured a ton of different NVL72 GB300 systems. In terms of the actual numbers, revenue, basically a double. OpEx has also doubled. Operating income margins at 4%. Now, again, that one, they're 20 cents away from profitability. That's going to get there. You would imagine net loss is negative 8%. Again, that looks like in a couple quarters, that's going to turn into net income that's positive on a GAAP basis. And then on net interest, they have $310 million. Their debt to equity ratio is the biggest thing on Coreweave that gets people to be afraid. In fact, one of the reasons people like Nebius, when I was doing the Nebius deep dive, the biggest thing I saw, the difference between Nebius and Coreweave, is the amount of debt that one was taking on versus the other. Now, Coreweave's also, when you have 55, Nebius does not have 55 billion in backlog, but, and that's why, and it's because they're taking on all that debt to buy all those GPUs, but still, that is kind of the core difference between them. But investors are willing to give Coreweave that premium. Coreweave right there, down about 0.3% after hours, basically flat, not making a crazy move. Nebius up a little bit after hours. D-Wave's up a little bit, and then Big Bear 11% as it's continuing to get a move. Now 12.9 for Big Bear. Let me go to the Big Bear earnings. We looked at the headline numbers. Let's read what management said, and then we'll keep going from there. We announced a definitive agreement to acquire Asts, a fast-growing generative AI platform for secure distribution of AI models and agentic AI capabilities built specifically for defense and national security agencies. Asts is expected to deliver annual recurring revenue of approximately $25 million in 2025, demonstrating a year-on-year increase of approximately 6 times their ARR. Big Bear is paying $250 million for a company doing $25 million, so they're paying 10 times sales. I don't know if that's a good multiple, but nonetheless, that's what they're paying. I have to go deeper into what Ask Sage even is and if that's worth paying that multiple. But they're paying $250 million for that company that's going to be doing $25 million in revenue. Sequential improvement to the balance sheet, a record cash balance of $456 million. Guidance is $125 to $140 million. That's down from last year at $180 million, but they are keeping their guidance where it is. CEO says, today I'm thrilled to announce that Big Bear AI has signed a definitive agreement to acquire Ask Sage. Ask Sage already supports more than 100,000 users on 16,000 government teams across hundreds of commercial companies. It is a turnkey platform that's in production today at scale in environments that matter the most. By integrating Ask Sage with Big Bear AI, we are creating what the market has been asking for, a secure integrated AI platform that connects software, data, and mission services in one place. Despite delays resulting from the government shutdown, we believe the potential for new businesses in the field of broader security and defense remains strong, and we expect to see those opportunities, including accelerated spending resulting from the Big Beautiful Bill, to materialize into contracts next year. Big Bear remains in a very strong position to benefit from the important task of delivering cutting-edge security and technology solutions to support national defense and the defense industrial base. Subject to applicable approvals, we look forward to closing the Ask Sage acquisition and continuing to execute on our M&A strategy. Okay, so they bought a company for 10 times sales. They're blaming the shutdown for why they weren't able to increase their revenue guidance. And then third, they beat on the top and the bottom. So you've got some things that are kind of good, kind of bad. I don't know if buying a company at 10 times sales to be able to make the numbers look a little bit better going into 2026 is the best idea. Granted, if they are getting 100,000 users integrated into this government platform, maybe that's something beneficial. I am a bit biased here with Palantir. They don't do acquisitions, and Palantir is also an AI company. And when I think about when a company does an acquisition, I ask myself, did the company do this because they needed to artificially create demand, or are they doing this because it's actually accretive? So you have to go deeper into the business model to understand that, which I have not done. So that could be one of the things that maybe is not the best. The thing that is really good is that they beat earnings projections on the top and the bottom. And so, with Wall Street, perception is reality. If you're beating the perception of losing 7 cents and 31 million in revenue, even if it's declining year over year, as long as you beat those estimates, that's what the street cares about. And I think that's why the stock right here is up 15% after hours as it's getting their move. They needed this to get TSA contracts. Yeah, I mean, I've got to go deeper into Ask Sage. I have no idea what the acquisition is for. 10 times sales, though, is aggressive, dude. 10 times sales feels aggressive. Because you got to ask yourself, how long is it going to take them for that acquisition to become that accretive? Now, granted, they may be thinking there's a different way they can position it with the overall platform that they're offering to governments to be able to, make an argument. I don't like that they're blaming the shutdown for no products. Last time they kind of did the same thing. They blamed something else. And last time they didn't even have an excuse. Last time they just said that, we are optimistic that the Big Beautiful Bill will create opportunities for us. But not increasing the revenue guidance for this year means that, obviously those opportunities are not materializing. Rocketlab right here up 7%, Big Bear up 14%. Palantir shareholder says 10 times sales is aggressive. Okay, but I think there's a difference between Palantir and some of these other companies. That's all. That's all I'm saying. But look, at the end of the day, stock's up 15%. If you own the stock, you don't really care. Stock's making a move. So they beat on the top and the bottom. That's what matters. Acquisition could be very accretive, and that's probably what the street is giving them the credit for. No update to increased guidance, but if the shutdown really is the reason, then the shutdown's about to be done in a couple days. And so maybe Q4, they actually end up beating on the fiscal year targets because they end up getting some more contracts in the last 2 months. We know that the government tends to spend a decent chunk of money going into Q4, and that could be the tailwind for Big Bear. Big Bear right there up 14% on the day. Rocketlab up 6% on the day. What's the difference? Well, one company is growing 63% with operating margins of 51%. The other company is not growing at all. That's the difference. Then again, it's a $2 billion company compared to a $500 billion company. So Big Bear is a small cap. A lot of things can move Big Bear, and that's why you're seeing it move right now. Rocketlab, that's up 6%. But ASTS, that's up 1.5%. Oxy is flat. Riggeti's down 2. Plugs up 2. Rocketlab, I do think, is the story of the day, as they are very close to profitability. Rocketlab is just one of those companies you want to see get profitable as well, because they're such a good company. They're executing in so many ways, and they were like losing 20 cents a share last year. So the fact that they're, I would say, 1 quarter away from profitability seems bullish. Here are the earnings for Paramount, and then we'll keep going from there.
Hey, Julia.
Hey, Morgan. This is the first earnings in the combined company from the combined company Paramount Skydance. The company reporting an aggregate of $6.7 billion in netted revenues for the entire quarter, and an aggregate adjusted loss of 12 cents per share. That's for the Paramount Global company pre-merger, as well as the period in which the companies were combined. TV revenue a little bit lighter than expected, but direct-to-consumer revenue coming in stronger than expected. The company also guiding for 2026 for total revenue of $30 billion, saying that'll be led by a healthy acceleration in D2C revenue with global profitability.
Now, Paramount, from my understanding, also is trying to deal with a lot of different mergers and acquisitions. So you got the stock 2% move. Looks like fiscal year guidance is reasonable. That was the last earnings that we had today. But really, the story after hours is Rocketlab and Big Bear. Big Bear 15% move, 660. And Rocketlab, almost a 10% move at 7.5 on the day. Nebius versus Big Bear. I would say these are different companies, having researched Nebius more deeply. There are obviously some SaaS components to Nebius, but the real story is what they're doing with data centers. Big Bear is an AI company. They are selling software. They're trying to get recurring revenue on contracts with that software and trying to create a margin that's attractive enough. $140 million is what they are charging, or what they're guiding for this year. They're trading at $2.5 billion. So, you're paying basically 14 times sales for the entire company. Again, at $2 billion, it doesn't take a lot to move this thing, which is also important to understand. It was not in the top 20 stocks traded in the options market today. NVIDIA, Tesla, Palantir, iBit, and Opendoor were the top 5. SoFi was number 6. Then you had AMD and Apple. Beyond Meat was actually up there. Big Bear is it is a big name traded in options. It didn't make the top 20 today, but you do have it show up many times on this top 20 list for options. Why did I rend dump today? Honestly, I don't know. Probably the same reason that Coreweave is not really catching a bid, even though they had really good earnings. Coreweave now down 2%. I'm telling you guys, I think one thing that's freaking out the market is this debt for data center stuff. I've been trying to research a lot more about it, and it's not bad. It's about $100 billion in debt when you look at all the numbers together. We've had trillions of dollars committed to spend. So $100 billion out of, 3-4 trillion is not that crazy. It's not like, this is like $1 trillion worth of debt, but it's something that I think the street's just trying to understand. And until they fully understand it, there's going to be some choppiness. Coreweave right there down 1.5%. Rocketlab holding 7. Would not surprise me if Rocketlab takes a breather. I mean, Rocketlab's very volatile. Would also not surprise me if it continues to go higher. Same thing with Big Bear. I mean, 15% move is pretty big. Now, the call for Big Bear, they don't really ask or take questions. So I don't think you're going to get any Q&A if I'm not. Last time they didn't do it, right? So this time maybe they do. But if they don't, I'll go to their website. Then it's going to be a quick call. And then we got Coreweave at we have Coreweave in 25 minutes. Coreweave in 25 minutes. So Matt Money is already live. I'm going to link Matt's channel right now for those that want to watch Rocketlab. I'm sure they're doing some great analysis on Rocketlab, and that call is probably going to happen very soon. So I'm putting Matt's link in the chat. I will be covering Coreweave in the next 25 minutes, and we'll take a look at Big Bear right now and see what else they say. Yeah, Tess says it was a very short 20-minute call. Okay, let me go to their website. Let's pull up their call right now and just see what we can get. Okay, let's pull this up.
Big Bear AI's growth. Over the past several months, we've built and refined a disciplined, thesis-driven approach to M&A, one where every investment is structured to advance our mission, strengthen our differentiation, and build long-term value. Our acquisition framework focuses on 3 areas where we believe that BigBear.ai is best positioned to combine our mission expertise with cutting-edge technology and achieve greater impact for our performance and investors. First, disruptive AI mission solutions for national security. Unlocking the power of AI for the defense mission is essential to America's continued leadership in global security and to maintaining our edge in strategic competition with potential adversaries. We're evaluating high-growth companies that have built secure, scalable, mission-tailored AI solutions.
Okay, there's not much that we're getting from that. I'll go back to it in 10 minutes and see if they do any Q&A. If not, they're going to be done in about 15 minutes if they're doing the same thing that they did last time. But we'll have Coreweave at 5 p.m. and we'll see what we got from there. Again, Matt's covering Rocketlab, putting his link in the chat. I think that call starts in like 20 minutes as well for Rocketlab. So you will get that call at around 5 p.m. Eastern. Okay, so the summary, and we'll get on to some of these Trump quotes in a second. The summary of earnings today: Plug Power beat on the top and the bottom, stocks up. Coreweave beat on the top and the bottom, stocks down. Not crazy down. TeraWolf, bad miss on EPS, stocks down 4%. Not even that big of a deal. Beyond Meat's up 6.72%. I'll get their numbers in a second because I don't think we looked at their numbers. ASTS, they did do 14 million in revenue. I'm looking at the website right now. Which, can someone tell me, is this the first quarter they've actually generated revenue? Like real revenue? Or have they done that before? They have 3.2 billion in cash. So they have a very healthy balance sheet and 14 million in revenue. So we can't say ASTS doesn't do revenue anymore if they just did 14 million in revenue. Rocketlab, amazing quarter. That's up 7.32%. Big Bear just went from up 16% to up 10%. But still, they beat on the top and the bottom. So very good for Big Bear as well. And then you got Riggeti that missed on EPS. That's down 2.4. That's what we got on all these earnings. Okay, Trump. What the heck has Trump been saying? Is he still live? Let's see. Is he actually still live? He might be taking questions still. No, he's not. Okay. So let me pull this up. And let's just go to Q&A. Let's see if we can get some of these moments. Then we'll do Coreweave in a few minutes. ASTS is $1 billion in revenue commitment according to the press release. That's the reason why. That's the reason why the stock jumped as much in September, right? With the partnership that they put out. Yeah, right here. Secured over $1 billion in aggregate contracted revenue commitments from partners as commercial efforts and integration with partner. Yeah, I think this was one of the things that people saw in November when they fell to 36 after that SpaceX news. And, a lot of people expected partnerships with companies like Verizon, Vodafone, et cetera. We're going to secure a lot of revenue. So the revenue's coming. It's just not there yet at the, monumental levels that people are expecting, but eventually it will be there. $1 billion in aggregate contracted revenue for ASTS. Let's go to Beyond Meat real quick and let's see their numbers. That stock is up 6%. Beyond Meat, I do not see their numbers. I do not see any of their numbers. Their call's at 5. No one has their numbers on Twitter either. Their website's not even loading anymore. Okay, we don't have Beyond Meat. We do not have Beyond Meat. Let's go to Trump. I'll see if I can get Beyond Meat in a second, but let's go to Trump and then we'll keep going from there.
Mr. President, in Syria,
behind you, Caitlin, behind you.
Thank you.
Thank you, Caitlin.
On Syria, can we expect an announcement on a pact between Syria and Israel, or an announcement on them joining the anti-ISIS
coalition?
Yeah,
you can expect some announcements on Syria. We want to see Syria become a country that's very Switzerland to remain successful, and we're a part of Switzerland in the sense that they've been a very good ally. Yeah, we're working on them and some others, and we're working on others to increase them a little bit too.
How close is it to Switzerland?
Switzerland? What, do you have something to do with Switzerland?
No,
He wants to buy a watch. He wants to buy a watch.
He wants to buy a nice watch.
He's a cheese.
He wants to buy a nice Rolex. Right? We'll give Rolex some publicity. Because Rolex they've been very nice, Now, look, it's a beautiful country. It's a small country, but economically very big. So we're working on something. Caitlin?
After a meeting with the Syrian president earlier today, Marjorie Taylor Greene, who is a big ally of yours, said that she would rather see you focused on nonstop domestic policy meetings here at the White House instead of nonstop foreign policy meetings. What's your response to her saying that? And also,
okay, this is an important question because MTG has been kind of flaming the Trump administration on healthcare and affordability and all this stuff. So curious to see how Trump kind of handles this and what he's thinking about the sort of out-facing issues that the Republican Party is dealing with right now.
Saying that grocery prices are up and not down, as you've said.
Yeah, so I don't know what happened to Marjorie. She's a nice woman, but I don't know what happened. She's lost her way, I think. But I have to view the presidency as a worldwide situation, not locally. I mean, we could have a world that's on fire where wars come to our shores very easily if you had a bad president. We had a horrible president, and we ended up with Russia, Ukraine, and we ended up with other disasters, too. Don't forget, I put out 8 wars, 9 to come. I think I'll get the other one taken care of, but I put out 8 wars. And look at the damage that Russia, Ukraine has done to us as a country. I mean, we spent $350 billion. We're not spending any money anymore. Now they pay us through NATO. You know, I got NATO to go from 2% to 5%. Well, that's very important. When you're president, you really sort of have to watch over the world because you're going to be dragged into it. Otherwise, you're going to be dragged into a world war. I think if I weren't president, first of all, that war would have never happened if I was president. And if I weren't president, that war could have led to World War III. It won't. It's not going to anymore. But when I first got in, I said, wow, this situation could lead to World War III. And I got NATO together. I got everybody together. But with all of that, I passed a great, big, beautiful bill, which is the biggest tax cuts in the history of our country. So when somebody like Marjorie Taylor Greene, who's now catering to the other side, I don't know what, I guess she's, got some kind of an act going, but I'm surprised at her.
So we can tell the obvious answer from Trump right here is that he's kind of delegitimizing MTG's political approach right here. And at its core, he's going back to the argument about the big, beautiful bill, tax cuts, and these are the things I think he's going to have to focus on to kind of bleed into the argument that affordability is actually getting better under his administration. But right there, you can tell he's trying to essentially say MTG doesn't know what's happening. He said she lost her way. And from that perspective, he's going to try to kind of steer the argument in a different direction around those tax cuts that, from his perspective, should be the thing that the everyday American actually cares about because it's potentially putting more dollars into their pockets.
But when somebody like Marjorie goes over and starts making statements like that, it shows she doesn't know. I don't devote a lot of my time. Let me give you another example. China. China was going to hit us with rare earth. Now, everybody says, well, what does that mean? Magnets. If China refused to give magnets because they have a monopoly on magnets because they were allowed to happen over a 32-year period, there wouldn't be a car made in the entire world. There wouldn't be a radio. There wouldn't be a television. There wouldn't be internet. There wouldn't be anything because magnets are such a part. Now, nobody knows what magnets are and not overly sophisticated, but to build a magnet system would take 2 years. So if I weren't able to say to China, look, if you're going to do that to us, we're going to charge you 158% tariff. It was 100% on top of 58%. And China called up immediately and said, we will make peace. And we made peace. We made a great deal. We made an unbelievable deal. China's paying tariffs to the United States, not the United States paying tariffs to China, which has always been the way it was. Nobody can believe these deals.
Open Door CEO just said tomorrow his family is buying $1 million worth of stock at the open. I mean, dude, I like the CEO, but goodness, just tweeting that his family's just letting everybody know his family's going to bid up the stock tomorrow morning. Word for word, tomorrow's the first day I'm allowed to buy open and my family's buying $1 million worth of stock at the open. I like him as a CEO. It's just weird to say, dude. You could let the filings come out later and then talk about it. Just saying that beforehand, it's weird, dude. Is that just me or is that kind of weird? You don't say that, especially if it's not even you, it's your family.
But so when somebody makes a statement about he's devoting time to the world, well, the world is the United States because if the world's in trouble or if the world is ripping us off, the world was ripping us off before I came here. Europe was getting massive tariffs. They were sending us 9-10 million cars a year. We were sending them none. They were not taking our agriculture. We were taking massive amounts of their. It was so unfair. Now we have a deal where $950 billion is coming into the United States because of me and because of tariffs. So if I don't do all these things, our country is doing very poorly. So, it's easy to say, oh, don't worry about the world. But the world is turning out to be our biggest customer. The world was on fire. And we could have been in that fire very easily if you didn't have a president that knew what he was doing.
Can you guarantee to Americans that travel is going to go back to normal once the government all the air travel
better than normal. You know why?
When the government reopens.
Yeah, sure. It'll be much better than normal because we're buying the most sophisticated avionics and technology for our control towers, and we didn't have that. We had a guy named Buttigieg. Edge, they say is the best way. Just say two edges, like off the edge of a cliff, which is where they were taking us, by the way. Edge was the Secretary of Transportation, and he spent billions of dollars trying to patch together our air traffic control system, which was a conglomeration of all different systems in all different cities. They had hundreds of companies working on it, and they were spending billions of dollars. And when they turned it on, it didn't work. It didn't even work a little bit. That's why you had a helicopter crashing into an airplane, that if we had a great system, bells and whistles would have started going off. So we are now in the process, we're in final bids of getting the finest system anywhere in the world. I've analyzed it. Sean Duffy has been working really hard on it, doing a fantastic job, by the way. And over the next 2 or 3 weeks, we'll be handing out the finest air traffic control system anywhere in the world. All the towers will be equipped. They were going copper wire into glass wire into other types of wire. And if you knew anything, copper wire doesn't work with glass. Glass doesn't work with other substances. And they spent billions of dollars, and when they turned it on, nothing happened, okay? We're getting the most sophisticated, all brand new. Every control tower will have the same exact system. It'll be the most sophisticated system by far in the world. And what we've done is we've looked around other countries and we've taken the absolute best systems in every different form, because there are different, you have lots of different companies like IBM and Raytheon and a lot of great companies. They're all bidding, and we're going to pick the best one, and it'll get built relatively quickly. And we are going to have the greatest air traffic control system anywhere in the world. Thank you very much, everyone.
I really do think 2026 is going to be a question about affordability. He gets a question about affordability, immediately pivots to he solved 9 wars, big, beautiful bill. All of those are legitimate arguments, and all of those are legit talking points that the Trump administration should be holding on to. But at its core, he's not answering that question, right, about grocery prices, because he knows at the end of the day, grocery prices are up. I mean, this is just subjective. If you look at the data, there are some things that have come down, but the majority of stuff is up. Now, it's not up like crazy, but it is up, and it's having an issue on affordability. I really wonder, and I think the reason this whole $2,000 dividend thing is becoming mainstream from a talking point perspective on Trump, I wonder how the party is going to navigate this issue. Because there's a lot of ways to respond to it. As Tess says right there, affordability is up across the world. Yeah, dude, I don't even think this argument is real. Like, affordability has always been an issue. You're telling me in the past 9 months, things have become so unaffordable that every single person just simply, like in certain parts of the country, 100%. In New York, obviously, we've seen that. But you're telling me it's that much different from this time in 2024? Like, if that's the case, the most important argument during the Biden administration versus Trump would have been affordability. It wasn't. It was illegal immigration. It was not the cost of living. I think this is why we spent some time analyzing this Mamdani thing. The Mamdani election, I think, really created a headline argument around affordability that now every, I guess, Democratic talking point is hitching onto. And as a result, that could force the Republicans to kind of make an argument around how to defend that the administration is affordable. Which, look, they've done a bunch of things that can contribute to affordability with tax cuts and no tax on tips, no tax on overtime, et cetera, et cetera. But that core argument about, hey, grocery prices are down, et cetera, that's one thing that I think, when MTG starts to go the opposite direction, you could tell it pissed him off. I mean, as soon as he heard her name, he was not happy to have to deal with that question. By the way, this was the tweet by Kaz. Dude, I don't get this. I'm sorry. I hope Open Door goes to the moon for everybody, but really? Like, if Vlad tweeted, hey, guys, my family's going to be buying some Robinhood stock tomorrow, you would not see me defending that, bro. Like, Tanner, Roy, and I would not be defending that. Like, what is this? Tomorrow's the first day I'm allowed to buy Open and my family is buying $1 million. Really going to put an exact number of how much your family is buying and letting the public markets know as a CEO of the company I mean, like, he's not going to get investigated because this is the Paul Atkins is very laissez-faire, and he's not going to go crazy about this. But is Open Door even up after hours? Because it's just weird, right? It's not just me, right? That's any CEO who were to say that. Open Door's up 2% after hours. Of course it is. Why wouldn't it be? It's up 21% of the day, 2%. I mean, if he's telling you his family's going to bid it up, people are like, okay, cool. I'm going to buy some more. No, I understand if it's not in a blackout period, he's fine. Like, technically, he can get away with saying this. It's just weird, bro. The way he's saying it. Tanner says, but are they buying it on Hood? I mean, probably they are. But goodness, dude. I don't know. That's just weird. To be that specific and give a dollar amount and all that stuff. I don't know. He's not going to have a legal issue with that. It's just, I don't know. I guess that's how he's embracing social media, and that's how he's going to do it. So there you go. But again, yeah, going to Trump. I mean, what are people thinking? We got 8 minutes until the CoreWeave call. Are people thinking that his response was good? It wasn't good. I don't even think it has to be a political analysis right here. It's just objectively. You know, if you ask someone a question about grocery prices, affordability, and then the conversation goes to Russia, Ukraine, you can tell they're trying to obfuscate it because they don't have the best answer to the question. Which, look, in 1 year, the guy's not going to get the country to be affordable. So I don't even think it's something that you can easily blame Trump for. It's like the economy is not affordable. It's like, okay, we got a lot of different issues. I don't know if you put all the affordability blame on him. But objectively, he dodged the question. And so did Mike Johnson the other day. So it's one of those things where the market's going to have to figure out how much they care about this stuff. Bad response. He just made unrealistic promises when he campaigned. The thing that's confusing me is, dude, affordability was not the concern of the campaign. For anyone who covered the 2024 election, it was about DEI, quite frankly. That was a big issue. The sort of woke social stuff, right? Men and women's sports, all that was like a major thing. And then immigration. Like this affordability, I remember covering that campaign. That was not the number one. That was not Biden's or Harris's talking point. It really was. So it's this thing like came out of nowhere, and now it's like the de facto conversation around this. And I guess we're gonna have to see what happens. This is because of the impact of the tariffs. Well, I think that's why Trump also made a lot of arguments today about why the tariffs are actually positive. Look, the Supreme Court thing goes the wrong way. I don't know exactly what they're going to be able to do, but I think Trump is trying to gear up to get people to realize that, you know, the tariffs are still very positive. Tess says, England's been in a cost of living crisis since COVID. I always thought when I'm on your side of the pond, you hadn't been affected by it yet. I'm not saying the cost of living hasn't gone up. I mean, obviously over the past 5 years, it's been dramatic, and, you know, we had record levels of inflation, and that also caused the cost of living to go higher, contributed by Republicans and Democrats. It's almost like ASTS flat after hours. It's almost like it became a talking point after this Mamdani thing. And now every time you hear this back and forth, it comes down to affordability. And I'm like, affordability was not a word that people talked about in 2024 during this election. So, but this is politics, right? Politics pivot super quickly, and people latch onto an idea and a topic. And now I think that's going to be the major concern. Rocketlab, we are not listening to it. Matt Money is listening to it. I'll put the link to his channel for those that are curious about that. Big Bear, let me see if they're taking questions. Big Bear's still up 12%. Rocketlab's up 8.4%. Let's see if Big Bear is still doing their earnings. And then we got Coreweave in about 5 minutes. And we'll hear what we have to say, or hear what they have to say on the state of AI. Nope, it's done. Okay, so that call ended in 20 minutes. They did not do questions. It's 4:55, started at 4:30. Max it could have been was 25 minutes. No Q&A for Big Bear. Stock up 12% after hours. Jace, thanks for the super chat. Affordability became important when the middle class started losing jobs without any new ones to replace them. You know, that is a really good point. I mean, one thing that we're forgetting to discuss is the layoff labor market picture with AI. I know unemployment is still at around 4.3%, which when we actually get the government open and we start to get some more data, maybe that's closer to like 4.5%. But the last reported number we had was 4.3%. I mean, you can start getting a lot more concerns about affordability if you have a lot more layoffs and if people think AI is taking their jobs, which, you know, Amazon laying off 14,000 people, UPS getting ready to lay off 48,000 people. that will bring up the conversation of affordability real quick. And Trump's kind of in a catch-22 right here, because the reason the stock market's at all-time highs is because AI is becoming so good for margin efficiency that it's inevitably leading to people getting laid off, and that's really good for a company's bottom line. The problem is, as a president, the number one thing that most presidents care about is job growth. And that's why I was saying last week, it's hard for me to imagine Trump wakes up every morning with negative job growth. Like, that's just not what his personality is built for. He'll either say the numbers aren't real, or he'll try to make sure that's not the narrative as much as possible, which means he's going to want to try to grow the economy. But if you've got all these companies that have to lay off people because they just don't need these employees because of this advance of AI, the only people that really benefit from that are us, asset holders. You own Amazon stock, you're going to benefit from that. But Main Street doesn't. And Democrat or Republican, I don't know how any administration is able to handle that, because what? The administration can't force Amazon to employ people. They can't force them to, not replace 600,000 people with robots. Like, technology is technology. And so this is why it's going to be one of those core things I think we're definitely having to pay attention to going over in the next couple of years. But that is what we've got right there. Coreweave, we got 3 minutes until this call starts. And then we'll keep going. Big Bear AI, again, call is closed. What did we have on the poll? Rocketlab, 69% of you said pump, 31% said dump. Rocketlab definitely got a pump. Hopefully the pump continues in the call. And overall, I'm very happy as a Rocketlab shareholder with that quarter. That was not a bad quarter by any sense of the imagination. ASTS being flat, I think, is also a win. ASTS, again, has doubled in the past month and a half. So, yeah, it's not back at 100, but you can't be too upset about it. Rocketlab right there up 8%. Beyond Meat did not come out yet, guys. And by the way, the earnings is today. If you go to their website, it says the earnings is November 10th. So for everyone saying it's tomorrow, their website says it's today. But I don't see the results anywhere, not on Twitter, not on their website. I mean, I guess some people are thinking 5 p.m., so maybe in 2 minutes we'll get the results, but so far has not been out yet. Japan considers using public funds for nuclear projects. Interesting. Okay. I mean, you might start having some nation states tap into their country balance sheets to fund new initiatives. I mean, if that is nuclear growth led because of data centers and like energy related to data centers, that would be quite interesting. The United States has not officially done that outside of the equity stakes that we've taken in some of these companies. Open Arrow right there up 2% after hours, and then Nebius up 2% as well. Did TeraWolf go positive? Wow, TeraWolf went green. Even after a 900% EPS miss, down 4%. Now it's back to green. CleanSpark still down 3% after the $1 billion offering. Rumble is down 1%. Iren's up a little bit after hours. Big Bear still up 12.9%. And then Coreweave is down 1.3%. Would you eat Beyond Meat medium rare? That's a good question. The funny thing about Beyond Meat is you got a lot of people that own the stock that are never going to eat their product, but they're obviously buying it for the movement. But yeah, I don't think most people in the name would ever eat the product. I don't think I would. Okay. Do we have it? Are we live on Coreweave? Not yet. We got about 30 seconds and then we should be live. TeraWolf did $5.2 billion in offerings. Their market cap is only $5.8 billion. Look, a lot of these plays are going to have to raise capital. If that capital is accretive, it'll be because they get a lot more hyperscaler deals. If not, it might not be the best use of tapping the debt markets. But you do have more people. Okay, Coreweave's live. I'll be Beyond earnings in a second, because that should be popping up. I'll put that in the chat. But I think Coreweave is live.
2025 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. To ask a question, press star 1 on your telephone keypad. To withdraw your question, press star 1 again. Thank you. It is now my pleasure to turn the call over to Coreweave.
Thank you. Good afternoon and welcome to Coreweave's third quarter 2025 earnings conference call. Joining me today to discuss our results are Mike Intrator, CEO, and Nitin Agarwal, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements.
It definitely sounds like AI. It definitely sounds like that's some AI.
Differ materially are set forth in today's earnings press release and in our quarterly report on Form 10-Q to be filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investors.coreweave.com. A replay of this call will also be available on our investor relations website. And now, I'd like to turn the call over to Mike.
Good afternoon, everyone, and thank you for joining us. Coreweave once again delivered an exceptional quarter, showcasing the accelerating momentum underlying our business as AI adoption proliferates globally across industries. We continue to operate in a highly supply-constrained environment where the demand for Coreweave best-in-class AI cloud platform far exceeds available capacity. This insatiable customer demand is a clear signal that the world's leading companies trust Coreweave to power their most critical AI workloads. In Q3, we beat expectations, delivering revenue of $1.4 billion, up 134% year over year. We added over $25 billion in revenue backlog in the third quarter alone, bringing us to over $55 billion in revenue backlog to end Q3, almost double Q2 and approaching 4 times year to date. Further, Coreweave has reached $50 billion in RPO faster than any cloud in history. These results demonstrate the deep confidence customers have in Coreweave, the company they trust as their essential cloud for artificial intelligence. We continue to scale aggressively, even as the industry remains capacity constrained. We expanded our active power footprint by 120 megawatts sequentially to approximately 590 megawatts, while growing our contracted power capacity over 600 megawatts to 2.9 gigawatts. This leaves us well positioned for future growth with more than 1 gigawatt of contracted capacity available to be sold to customers that we expect to largely come online within the next 12 to 24 months. In Q3, we executed large-scale compute contracts with many of our largest customers, including Meta and OpenAI. Each represents a meaningful expansion of existing relationships and a diversification away from any single customer. We also grew our relationship with a leading hyperscaler, marking the 6th contract with this customer to date. In fact, 9 of our 10 largest customers have now executed multiple agreements with us, the only exception being a new customer we onboarded in Q3. Coreweave is the force multiplier that empowers pioneers to accelerate breakthroughs in AI innovation. These are the world's most sophisticated AI organizations, and once they experience the performance, flexibility, and reliability of Coreweave Cloud, they consistently expand with us. That is the strongest validation we could ask for. Our exceptional growth illustrates just how quickly AI adoption is progressing beyond the frontier AI labs and hyperscalers. Broader global demand and our recent large wins are driving diversification of our revenue base. For example, the number of customers that exceeded $100 million of revenue over the last 12 months tripled year over year. AI native and enterprises across sectors are embracing Coreweave to transform operations and unlock new sources of innovation, productivity, and growth. At the forefront of foundation model development, Poolside selected Coreweave to power its mission to build artificial general intelligence and enable the deployment of agents across enterprises, while Periodic Labs is using Coreweave to push the boundaries of scientific discovery and computational research. At the application layer, we added AI native customers like Jasper, who chose Coreweave as their cloud partner as they transform the digital marketing landscape. We are also seeing incredible momentum within enterprises. CrowdStrike chose Coreweave to advance the development of AI agents for cybersecurity, while Rakuten is using our platform to transform their visual language models, helping to achieve greater transparency, reproducibility, and speed in their AI workloads. We also saw further expansion with a wide range of enterprise customers, including a leading software design platform and a large telco operator in the US. Our reach now extends into the public sector, a market with unique performance and security requirements. We recently launched Coreweave Federal to bring our cloud services to the US government agencies and the defense industrial base. Already, NASA is leveraging our services to advance scientific exploration at its Jet Propulsion Lab. We are honored to help strengthen America's AI infrastructure, enabling agencies to accelerate innovation and address critical missions and our national interests. These recent wins underscore that we are enterprise ready. With our customer base broadening across verticals and geographies, we are excited to welcome John Jones as our first Chief Revenue Officer. John joins us from AWS, where he served as Global Head of Startups and Venture Capital. John is a strong addition to our team and will play an important role scaling our global revenue organization and driving expansion through this next phase of growth. Next, as I move to discuss our growing data center footprint, I want to briefly touch on our previously proposed acquisition of Core Scientific, which was terminated in October. While the deal made sense strategically for both companies, the valuation required by their shareholders was simply not a price that was appropriate for Coreweave, particularly because the outcome of the transaction in no way adversely impacts our ability to achieve our growth ambitions in the coming years. Instead, we will continue to work closely with Core Scientific on the approximately 590 megawatts of capacity we have already leased. Our disciplined approach to expanding our capacity footprint ensures we are meeting the surging global demand for Coreweave's cloud services. As I mentioned, we grew our contracted power capacity to 2.9 gigawatts this quarter as we diversified across size, geography, and developers, enhancing resilience and flexibility across our portfolio. As of Q3, no single data center provider represents more than approximately 20% of our contracted power portfolio. In the past quarter, we added 8 new data centers across the US, strengthening our domestic coverage, with additional expansions underway across Europe, including a major new presence in Scotland, which is being developed in partnership with the UK government. And as we announced over the course of the summer, we have embarked on self-build projects to further accelerate our footprint and provide us greater operational control. While we are experiencing relentless demand for our platform, data center developers across the industry are also enduring unprecedented pressure across supply chains. In our case, we are affected by temporary delays related to a third-party data center developer who is behind schedule. This impacts fourth quarter expectations, which Nitin will discuss shortly. Having said that, the customer affected by the current delays has agreed to adjust the delivery schedule and extend the expiration date. As a result, we maintain the total value of the original contract, and the customer preserves their capacity for the full duration of the initial agreement, demonstrating the confidence they have in our ability to provide the most performance solutions in market. We are incredibly proud of our technical accomplishments, and our customers continue to tell us that Coreweave is the absolute best place to run AI workloads.
Coreweave down 5%.
In the third quarter, we continue to deliver many of the initial scale deployments of the GB200s, while once again being first to market, this time with the GB300s, further highlighting our incredible track record of operational excellence. Coreweave's industry leadership is unmatched. We are the only cloud provider to submit MLPerf inference results for GB300s, setting the benchmark for real-world AI performance. And just last week, SemiAnalysis once again recognized our dominance, awarding Coreweave its highest possible distinction, its Platinum Cluster Max ranking, for the second time, ahead of more than 200 providers, including the hyperscalers and emerging neoclouds. No other cloud has achieved this once. Coreweave has done it twice, underscoring yet again that Coreweave stands alone at the forefront of the AI cloud. Demand for AI cloud technology remains robust across generations of GPUs. For example, in Q3, we saw our first 10,000 plus H100 contract approaching expiration. 2 quarters in advance, the customer proactively recontracted for the infrastructure at a price within 5% of the original agreement. This is a powerful indicator of customer satisfaction, as well as the long-term utility and differentiated value of the GPUs run on Coreweave's platform. Coreweave is the world's first AI cloud at hyperscale, comprising compute, storage, networking, and software purpose-built for AI workloads. Our growing cloud portfolio is underpinned by an expanding suite of software and services that help our customers build, train, and deploy new products faster. In addition to Mission Control, our proprietary orchestration solution, which is critical to autonomously operate our AI cloud at the bleeding edge, we recently launched Coreweave AI Object Storage, a fully managed storage service that eliminates any friction of moving data between regions, clouds, and tiers with zero egress or transaction fees. Coreweave's AI Object Storage delivers the highest amount of throughput of AI workloads while cutting the customer's cost by more than 75%. We have already seen tremendous interest in this offering, adding a number of initial customers, including frontier AI labs like Mistral. Across our entire storage platform, we have seen rapid customer adoption, eclipsing 100 million in ARR in Q3. Combined with our unique global network backbone, purpose-built for AI, this positions Coreweave as the hub for customers and their key AI workloads, enabling consistent, best-in-class performance and seamless user experiences when utilizing Coreweave Cloud or a secondary provider. We've supplemented these capabilities with further expansion of our observability and security suites to ensure that Coreweave is best positioned to handle all of our customers' critical workloads, regardless of the use case or geography. Our role over the last few years has been to support the pioneers who are developing and improving AI. Now we are expanding our role to help put AI to work. From the tools that developers require to build AI, to the solutions that the physical world requires to adopt AI, We've used M&A as a key tool to accelerate this journey, including the recently announced acquisitions of OpenPipe, Marimo, and Monolith. With OpenPipe, we quickly integrated their solutions into our broader fine-tuning product suite and introduced the first publicly available serverless reinforcement learning tool. With Marimo, we are expanding CoreWeave's exposure to and impact within the open source community, starting with entry-level exploration and prototyping. Both OpenPipe and Marimo fit seamlessly with the capabilities of weights and biases, where we are rapidly growing the developer base reliant on CoreWeave's holistic platform. With Monolith, we are expanding these capabilities into the physical world to unlock the monetization of AI today, initially focusing on industrial use cases with an established enterprise customer base and mature workloads, including leading auto OEMs like Nissan and Stellantis. Through the rapid and successful launch of new products and services, we are expanding our addressable market and growing with our customers. We are fundamentally evolving the capabilities of CoreWeave, which is creating beachheads and expansion opportunities into new markets, all in the service of further supporting the rapid growth of AI and enabling AI builders and innovators to get to market faster and more reliably and drive ROI. Our engagements are getting more sophisticated, as evidenced by our partnership with CrowdStrike, which will unlock and accelerate partner-driven growth. Our new storage product and partnership with Vast Data is another example of accelerating both our product portfolio and partner go-to-market motions, and allows us to compete in new markets where we previously had limited or no offerings. This facilitates customer-driven platform adoption and product-led growth, creating tailwinds for our business. As I close, I want to emphasize what truly sets CoreWeave apart. We are the essential cloud for AI, combining unmatched technical and operational excellence with a rapidly diversifying customer base. We deliver the most performant infrastructure, the fastest time to market, and the most advanced capabilities in the industry. The world's leading AI innovators choose CoreWeave because we enable them to move faster, scale smarter, and achieve outcomes that simply are not possible anywhere else. Our momentum has never been stronger, and the opportunities ahead continue to expand. Powered by exceptional products, an extraordinary team, and unrivaled execution, CoreWeave is ready to enter the next phase of growth as a full-stack AI service provider and hyperscale. The future runs on CoreWeave, and we are just getting started. With that, here's Nitin.
Thanks, Mike, and good afternoon, everyone. Our impressive third quarter results reinforce the relentless demand for CoreWeave and our focused execution.
Okay, so they're probably going to spend like 10 minutes going through the numbers. Stock's getting hit, guys. You guys said you heard guidance. I didn't hear guidance. Maybe I missed it. If anyone has the number that they heard, let me know. CoreWeave down 5%. It was down almost 7%. Hit 96.75. I have no idea what they said in terms of guidance. Maybe I just missed it, but there's got to be some number. Beyond Meat's down 3%. They missed EPS by about 20 cents. They missed revenue by, they beat revenue by 2 million. So they beat revenue by 2, missed EPS by 16 cents, 47 versus 31 on a loss. That's why that stock is down. And then the gross profit, 10.3% margins for Beyond Meat.
Demand remains robust for not just the Blackwell platform, but across our GPU portfolio. In the third quarter, we signed a number of deals for older generations of GPUs, adding new customers and recontracting existing capacity. The breadth of demand for CoreWeave's cloud services has enabled us to reduce our customer concentration significantly. Today, No single customer represents more than approximately 35% of our revenue backlog, down from approximately 50% last quarter, and even more meaningfully from approximately 85% to begin the year. Additionally, as of Q3, more than 60% of our revenue backlog is tied to investment-grade customers. This is what successful execution against our stated goal of platform and customer diversification looks like. Operating expenses in the third quarter were $1.3 billion, including stock-based compensation expense of $144 million. We continue to ramp our investments in data center and server infrastructure to execute against our growing revenue backlog, which contributed to the increase in our cost of revenue and technology and infrastructure spend in Q3. In addition, the increase in sales and marketing was driven by investments in marketing and scaling our go-to-market organization to capture the rapid growth of AI opportunities across enterprises and AI natives. The increase in G&A was driven by professional services and headcount. Adjusted operating income for Q3 was $217 million compared to $125 million in Q3 of 2024. Our Q3 adjusted operating margin was 16%. Adjusted operating income was better than expected due to higher revenue, lower costs due to timing of data center deliveries from our third-party partners, and improved fleet efficiencies. Net loss for the third quarter was $110 million compared to a $360 million net loss in Q3 of 2024. Interest expense for Q3 was $311 million compared to a $104 million in Q3 of 2024 due to increased debt to support the scaling of our infrastructure, partly offset by the benefit from better interest rates on our debt as we make further progress in lowering our cost of capital. Adjusted net loss for Q3 was $41 million compared to approximately break-even in Q3 of 2024, while adjusted EBITDA for Q3 was $838 million compared to $379 million in Q3 of 2024, increasing more than 2x year over year. Our adjusted EBITDA margin was 61%. Turning to capital expenditures. CapEx in Q3 totaled $1.9 billion, lower than anticipated due to the delays Mike mentioned related to deliveries from a third-party data center provider. The meaningful growth in construction in progress to $6.9 billion, an increase of $2.8 billion quarter over quarter, is a direct result. As a reminder, construction in progress represents infrastructure not yet in service and is excluded from CapEx until it is deployed. Now let's turn to our balance sheet and strong liquidity position. As of September 30th, we had $3 billion in cash, cash equivalents, restricted cash, and marketable securities. Growing rapidly and operating at scale demands a strategic approach to securing capital. Coreweave has established itself as the leading AI cloud and the leading innovator in financing the infrastructure required to power the world's most advanced workloads for enterprises and AI labs. We continue to make great progress in strengthening our capital structure and lowering our cost of capital. In Q3, we amended the DDTL 2.0 facility by increasing its remaining drawable capacity by over $400 million to create a new $3 billion tranche at SOFR plus 425, which is significantly below the original cost of the facility. As we discussed previously, we also closed DDTL 3.0 in the third quarter, priced at SOFR plus 400, which represents a 900 basis point decrease from the non-investment grade portion of our prior facility. Going forward, we expect to continue to be able to finance at lower spreads as our capital providers increasingly appreciate our best-in-class execution, as well as the durable cash flow and visibility that underpin our take-or-pay customer contracts. Further, we raised $1.75 billion in senior notes in July, extending our exposure to the high-yield market at a cost 25 basis points lower than our inaugural offering in May. Year to date, Coreweave has successfully secured $14 billion in debt and equity transactions to support our execution on our rapidly growing backlog and efficient scaling for long-term growth. Other than payments related to OEM vendor financing and self-amortizing debt through committed contract payments, we have no debt maturities until 2028. Turning to tax, in Q3, we recorded a non-cash tax benefit primarily due to the impact of one big beautiful bill. While the size of the impact to Q3 was one-time in nature due to a year-to-date catch-up, we expect the change in law to enable Coreweave to realize cash tax savings in future periods. Now turning to guidance. As mentioned, the delays in powered shell delivery associated with the data center provider will have an impact on our fourth quarter results. These delays are temporary, and as Mike noted, the affected customer has agreed to adjust the delivery schedule to preserve their capacity for the full duration and the total value of the original agreement. With that backdrop, we now expect 2025 revenue in the range of $5.05 to $5.15 billion. In addition, we anticipate 2025 adjusted operating income between $690 to $720 million and expect to end the year with over 850 megawatts of active power. In Q4, we will be bringing online some of the largest scale deployments in our company's history. This will have a near-term impact on adjusted operating margin due to the timing difference between when data center costs are first incurred and when we start recognizing revenue. We expect 2025 interest expense in the range of $1.21 to $1.25 billion, driven by increased debt to support our demand-led CapEx growth, partly offset by an increasingly lower cost of capital. Moving to CapEx, we now expect 2025 CapEx in the range of $12 to $14 billion. We expect this reduction in CapEx from our prior guidance will be mostly reflected by a corresponding increase in construction in progress due to the buildup of infrastructure waiting to be deployed following the delivery of powered shell capacity. As such, the vast majority of the remaining CapEx we had previously anticipated to land in Q4 will now be recognized in Q1. In addition, given the significant growth in our backlog and continued insatiable demand for our cloud services, we expect CapEx in 2026 to be well in excess of double that of 2025. These investments in our infrastructure platform will strengthen our competitive moats and support our continued hypergrowth. In closing, we delivered a record third quarter and remain more confident than ever in the long-term trajectory of our business. Over the course of this year, we've made tremendous progress, accelerating our revenue backlog growth that now exceeds $55 billion while diversifying our customer base, executing strategic partnerships and acquisitions to strengthen and broaden our platform, accessing new capital pools that meaningfully reduce our cost of capital, and scaling both our capacity and organization at an unprecedented pace. This progress enables us to seize the opportunities in front of us today and create a strong foundation for years to come. Our addressable market continues to expand, not only as AI adoption proliferates across industries and use cases, but also through deliberate business decisions we've made to broaden our product portfolio and capture greater wallet share across the industry. Coreweave is reaching escape velocity, scaling more rapidly and efficiently, and solidifying our leadership as the essential cloud for AI. Thank you to our investors and analysts for your support and engagement. We look forward to updating you on our progress in the quarters to come. With that, we move to Q&A.
All right, questions.
As a reminder, to ask a question, simply press star followed by the number 1 on your telephone keypad. We respectfully request that you limit questions to 1. And our first question comes from the line of Mark Murphy with JP Morgan. Please go ahead.
Thank you, Michael. Every discussion we have across the AI landscape, we hear that bookings are booming, and obviously that applies to Coreweave. But the bottlenecks around power and manpower are just becoming so severe. Can you speak to that situation relating to the third-party provider? Specifically, is it a shortage of power or manpower? Is it something outside of that with GPUs or memory or storage? And then have you spoken to your other third-party providers to get a sense of their own trending, relative to schedule, and whether they think they can, hold on their or deliver on their commitments into early next year?
Let me kind of take that question apart a few different ways, right? So first of all, you're correct. It is very frustrating for our clients. It's very frustrating for us because of the kind of systemic challenges that exist within the supply chains that are necessary to deliver, the global infrastructure that's required for artificial intelligence. Having said that, we have taken a number of steps along the way here to really drive home our ability to manage that environment, which is going to be challenging, into the future. We've really spent a lot of time diversifying our data center providers. We have created a significant portion of the company dedicated to being able to facilitate and assist with the operational component of delivering infrastructure. We've set up our own self-build efforts, including Kenilworth and Lancaster, Pennsylvania. So you see us kind of really spreading out our and ensuring that we're doing everything that is possible to limit the damage associated with, or the delays associated with, delivering this infrastructure, which is just overwhelming the supply chains. Now, when you have a diversified portfolio of paths to infrastructure, the relative impact of each delay becomes smaller. You just be able to draw on different data centers as you're getting it delivered. And so we really look at this as this is a significant block of infrastructure that's come on late, but the fact that the ultimate end customer that's going to be consuming this infrastructure has shifted the contract back to allow us to be able to deliver the full contract value in spite of the delays, really speaks to the value that the customers get out of our infrastructure. So, you're going to be hearing this theme repeated again and again as you talk to not just Coreweave, but you talk across the space. And it is a real challenge at the powered shell level. It's not a challenge for power, right? There's plenty of power right now, and we believe that there will be ample power for the next couple of years. But really where the challenge is the powered shell.
And so Michael, does this not relate to Core Scientific in any way, or is this totally removed from that situation that you've gone through?
So I'm not going to speak to any specific one of our data center providers. We're working with all of our data center providers to do everything we can to facilitate the ultimate delivery of the infrastructure that they're going to deliver to us. We've had some incredible success getting infrastructure delivered to us as you continue to see us scaling. You saw us hit 500, approximately 590 megawatts. We're up 120 megawatts since the last call. So you are seeing a significant amount of success as we continue to scale delivery. But I don't think it really matters who the individual data center provider is. This is a systemic problem that the industry is going to have to deal with for the foreseeable future. The important part here is that, or the important part from my seat is that the infrastructure, which is undergoing a delay, is not going to impact our backlog and our ability to extract the full value from the contracts that we're going to deliver on.
Our next question is from the line of Keith Weiss with Morgan Stanley. Please go ahead.
Excellent. Thank you guys for taking the question, and congratulations on another super impressive quarter in terms of building out that backlog. You're right. We've never seen this in terms of any cloud provider being able to build out that quickly. Mike, I wanted to ask you a question that's been asked of us a lot, that we're hearing a lot on CNBC, and it's really about sort of the risk of overcapacity. But I think it's more narrow than that people are worried about overcapacity from of what's being contracted by AI labs out there. The question I want to ask you, though, is how we should think about your guys' infrastructure and the infrastructure that you build, and how fungible that infrastructure really is. When you're building out for a particular customer, do those data centers, is that usable for any customer? Is it usable for inference and training? Or do you really build to suit to a certain customer that would lock you in and give you kind of less degrees of freedom, if you will, if one customer is doing better or worse?
Yeah, Keith, that's an excellent question. It's actually something that we've spent a lot of time thinking about here as we kind of proceed with our relationships with all our customers. And so, in short, the infrastructure is fungible. It would be able to be transferred from one client to another. The infrastructure is built to the most demanding specs, so it's able to be used for training. It's able to be used for inference. We really have thought a lot about making sure that we maintain as much optionality, as much flexibility within our infrastructure build as possible. And I want to highlight for everyone that a lot of that flexibility, a lot of that fungibility really does tie back to the incredible software suite that we provide that allows for such effective use of the infrastructure, right? Like when SemiAnalysis did their annual kind of review of the alternatives out there, there's a reason that Coreweave has come back time and time again as singular, as the best solution for this type of infrastructure that exists in the world. And that includes the hyperscalers, the neoclouds, and everyone else that's trying to deliver this infrastructure. We just do a great job, and we believe that there's a lot of value that we are protecting by providing such a robust software suite to be able to deliver infrastructure.
Our next question comes from the line of Kash Rangan with Goldman Sachs. Please go ahead.
Hi, thank you very much, and impressive backlog growth. Two things that I wanted to just touch upon. One is, Mike, I think you talked about how you're going to be diversifying your contractors on the data center side. Maybe you could give us a honest to goodness update on how far are we away from potentially reaching a point where any disruptions that have nothing to do with your business should not affect your revenue outlook. How far away are we from that point? And secondly, when you look at the developments, I mean, nobody expected maybe some did, but a $250 billion contract for OpenAI with Microsoft, nobody expected a $300 billion contract for OpenAI with Oracle. All of a sudden, certainly Coreweave has got a unique value proposition, being able to stand up GPU clusters very quickly, very effectively, at the speed of thought almost. But in a landscape where we're talking hundreds of billions of dollars being awarded to the hyperscaler giants, what gives you the the uniqueness 3 to 4 years from now when things have sort of settled into a supply equals demand? When we look back at Coreweave, what will be the shining value proposition that keeps you in the game at that point? And thank you so much, and that's it for me.
Yeah, thank you. Let me break that question into two pieces, right? The first question you asked is, about diversification and when does it start? When does it stop kind of causing dislocation in our numbers as we're delivering them quarter to quarter? And what I would like to focus you on here is, as the individual builds become smaller relative to the size of the entire portfolio of data centers that we are running, the impact of being a couple of weeks late will become less and less meaningful in the general accounting of what's going on, right? So when you're delivering 590 megawatts of power and you have a step function of 200 or 300, it's a material percentage that's going to be delivered over the next quarter, right? As we become larger and larger and start to build out the full 2.9 gigawatts of power that we have, having a data center that's 100 megawatts delayed a week or two is not going to have a material impact. And as Nitin said, we expect the overwhelming majority of that 2.9 gigawatts of power to be brought into service over the next 12 to 24 months. And so that'll give you a really good idea of how the curve begins to become more smooth as we get larger and the relative impact of each data center becomes smaller. And so that's the first part on the scaling side. The second part is, the question you're asking has been asked of us since we started this business. Why is Coreweave going to be able to deliver GPUs faster? Why are we going to be able to deliver the GPUs that NVIDIA uses to run its ML perf? Why are we going to be able to create software that is going to define the space? And with each quarter, you see us extending the lead with which we have because of the customization of our cloud to the use case that is required. And once again, you saw us in the semi-analysis, like, we're singular in this. We're out there building our product offering. We're building or buying additional capacity to further decommoditize the compute that we're delivering. And so, a company that's built singularly to deliver this type of compute will be effective on a go-forward basis.
Our next question is from the line of Amit Daryanani. Please go ahead.
Amit, are you on mute?
Amit, your line is open.
I'm streaming, guys.
Operator, let's go to the next question and we'll come back to Amit.
Yeah, I'm streaming. The fuck?
Come on. Operator, can we go to the next question and we'll come back to Amit?
Our next question is from Tyler Reck with Citi. Please go ahead.
Hey, hopefully you can hear me okay. Thanks for taking the question. So double clicking on some of the delays that you called out in the quarter, can you just help us understand the implications on 2026? I know, Nitin, you provided some high-level commentary on CapEx, but I mean, just given the visibility you have, particularly on the 24-month component of RPO, how should we be thinking about sort of the revenue implications of the shift? Is this a delay that you think kind of gets fully resolved into Q1? And should we see sort of a step up in growth rate next year relative to this year? Just any color on that would be helpful.
Yeah, so I'll start, then I'll hand it over to Nitin. I think it's important to understand that the ramp that we are seeing is at a is associated with the infrastructure from a single provider. And we are parallel pathing with other providers for other contracts. And so you're going to see a short-term impact associated with this delivery. And then what you're going to see is our ability to accelerate through the year back to schedule. So the overwhelming majority of the delay that you're seeing should be taken care of within Q1 of next year.
Yeah, Tyler, that is correct. The vast majority of the CapEx push out that we experience in Q4 will be done in Q1. And as you can imagine, we're going to ramp the capacity through the course of Q1 for this. As Mike earlier mentioned, the impact on the total revenue associated with the customer is not impacted here because we've been able to adjust the delivery dates associated with the customer so that the customer keeps the full capacity as well as the contract value associated with it. We will share more details around the 2026 build, and our revenue plan associated in the next earnings. But as we highlighted in this quarter, given the strong customer demand that you see, given that is demonstrated in our revenue backlog growth, as well as the continued customer demand we see, we expect 2026 CapEx to be well more than double of that of 2025.
Our next question is from the line of Michael Turrin with Wells Fargo. Please go ahead.
Hey, thanks very much. I appreciate you taking the question. I want to just try to tie some of the commentary together because the bookings growth clearly stands out, and there are a lot of questions just around the sequencing. And so it sounds like what you're saying is the supply chain impacts you're seeing are more single customer specific. What I'm trying to get a better sense of is, does this at all impact the cadence at which you're able to sign on new customers, or is this more tied to post-ramp signing and one more specific customer environment? And just as a small follow-up, does the NVIDIA deal specifically show up in the backlog metric? It might be useful to hear you expand on what that deal opens up, given it's a bit of a different structure there as well. Thanks very much.
Sure. So there is no impact on our ability to bring on more clients. I think it's important to understand that we're parallelizing the build of infrastructure. There is a problem at one data center that's impacting us, but there are 32 data centers in our portfolio. All of them are progressing to one extent or another. And so that is, each one of those is independent. And as Nitin spoke earlier, we have 2.9 gigawatts worth of contracted power that will come on in the next 12 to 24 months. And we are going to be looking to fill that with clients that are going to be using that, which will have a substantial impact on our revenue on a go-forward basis. This one data center will catch up, and then we will move forward from there. Want to talk about the NVIDIA deal?
Yeah, Michael, on the NVIDIA deal perspective, we're really excited about this deal. This contract allows for the capacity contracted and reserved for NVIDIA to be interrupted and resold to different customers. So the nature of this contract allows us to offer our services profitably to a wide range of smaller customers, such as high-growth AI labs that prefer shorter and lower upfront commitments, while eliminating any utilization risks for capacity from our side. So we're really excited about this. Given the flexibility in the contract to interrupt and to resell capacity, accounting rules require us that we exclude the amount we expect to be resold to other customers from RPO. To be clear, if not resold, this capacity will remain committed to NVIDIA and will be recognized as revenue. So you see this NVIDIA contract in our revenue backlog, but not in our RPO to a large extent.
So just to follow up with that for a moment there, as Nitin said, we're extremely excited about this because what this contract is going to allow us to do is to provide infrastructure to emerging companies, startups, companies that are struggling to get access to the computing infrastructure that they require to be able to build their business. And so the interruptibility here is a incredibly powerful tool for the resiliency and opportunities for new companies to become part of CoreWeave's broader offering. And we're really excited about this. We think it's a great structure. It is a deal with NVIDIA. They fully underwrite the economics because we will sell the compute to them. And I want to be clear that this really does represent an incredibly disciplined way of financing the compute in order to be able to reach parts of the market that we have been unable to reach, or anyone for that matter has been unable to reach up to this point.
Our next question comes from the line of Brent Thill with Jefferies. Please go ahead.
And then just wanted to be clear, you cut CapEx by 40% for the year. And just to be clear, this is from one customer, correct? You're not assuming other delays across the board, correct?
That is correct. So this is associated with a single provider, data center provider partner, and the delays associated with that. And as we talked in our prepared remarks, most of it, a vast majority of it, is going to be recognized in Q1. And in Q4, you're going to see a major impact on buildup of construction in progress associated with the buildup related to it.
Okay, terrific.
And our next question comes from the line of Raimo Lenschow with Barclays. Please go ahead.
Perfect, thank you. As we think about CapEx next year, Nitin and Michael, can you speak as well about the sources of funding a little bit? Because what we've seen for a lot of the other players is that leasing is coming up a lot more. You talked about CapEx, which is kind of what you need to do. How do you think about that path for you going forward between the different ways of kind of funding the business, which might give you even more flexibility? Thank you.
Thank you. So look, we've driven innovation on the technology side, and we've driven innovation on the financing side, right? The way that I look at this is that we will look at the full suite of potential ways of financing and expanding our footprint. And then we will choose whatever is the most cost-effective way of increasing our scale and serving our clients. And so if leasing is the path, that's the path we'll go. But, you know, we've seen a lot of different structures. We've created a lot of different structures that have given us access to capital over the past 3 years. And, you know, we believe that we're going to explore the full suite of those as we look forward. We don't sign customers without knowing where the financing is going to come from. You know, we go deal by deal, and we make sure that we have the physical data center spoken for, we have the power spoken for, we have the GPU spoken for, and we have the financing spoken for in order to ensure that we are able to successfully deliver compute to them.
Our next question comes from the line of Amit Daryanani with Evercore. Please go ahead.
Yep, hopefully this works better.
We got you.
All right, perfect. Mike, I was hoping if you could just talk about, as you shift from, you know, third-party data center providers to perhaps doing more of your own self-build, how does that impact your CapEx and time to market for power as you go forward? We'd love to just understand how do you think that optimal mix looks like and what the CapEx requirements could be as you perhaps go more towards self-build versus third-party data center providers. Thank you.
Yeah, so I want to be clear. We're not saying that we're going to go self-build and not use third-party data center providers. What we are saying is that self-build is a component of the way that you go about de-risking delivery across the broader portfolio. And so we're going to go ahead and we're going to continue to work with our partners who provide data center capacity that allow us to co-locate at their facilities, that build facilities for us. All of that is going to continue to be true. We need that capacity in order to be able to continue to move and operate at the speed and scale that we are. We just look at self-build as an additional piece of the puzzle. It puts us closer to the physical infrastructure. It embeds us deeper into the supply chain around the world so that we have firsthand information. We just think that you need to be on both sides of this fence in order to be as effective as you can be, de-risking what is a complicated supply chain environment.
Our next question comes from the line of Brad Zelnick with Deutsche Bank. Please go ahead.
Great. Thank you so much for taking the question. Mike, with 2.9 gigawatts in committed power and over a gigawatt yet to be contracted out to customers, meanwhile, we continue to see a number of other large deals get announced industry-wide. How do you think about, and how might you frame for us, the pacing on contracting out the remaining capacity, given the demand is insatiable out there?
Yeah, so look, thanks for the question here. The fact that there are other deals getting contracted out there is incredible validation for the supply-demand environment that we have been describing for years now, right? There is no entity that has the capacity to be able to deliver infrastructure globally in order to meet the demand that's being driven by the largest technology companies in the world, by the largest AI labs in the world, by government, by enterprise. All of these things are coming to bear. And so the fact that there are other deals going to other players is part and parcel for the fact that we, like the hyperscalers, like the AI labs, like the data centers, are being overwhelmed by demand. It is just reinforcing and validating the theme that we've been talking about. We think that, at the end of the day, the product that we deliver, right, which is a full stack, everything from the hardware all the way through the software, is the most valuable representation of this infrastructure that can be delivered to the market. And we continue to think that that will drive a significant amount of demand for our infrastructure. As far as the remaining capacity goes, we're being very thoughtful about continuing to drive diversification across our cloud. We're continuing to think about different applications that are going to be meaningful contributors to the way the world will work in the future. And we are allocating that infrastructure to those parties as quickly as we can in order to ensure that they are successfully able to launch their products, their enterprises.
And Brad, a couple of things to kind of keep in mind here as we kind of talked about in our prepared remarks. Today, approximately no customer represents greater than approximately 35% of our revenue backlog, which is meaningfully down from where we began the year at 85%. And 60% of our revenue backlog is with investment grade customers. So vectors that we are very thoughtful around as we take care of the capacity that we have available to be sold.
Okay, guys, I think that's pretty much it. I think they have like one or two questions left. But that's it. We are done. I don't know that much about Coreweave. I just know the call was like, it just felt like they were defensive the whole time, and not in like a Sam Altman type of way. It wasn't like they were getting confronted with any hard questions. It was just like, it didn't feel like they were super optimistic about the future of their business in relationship to data centers. Now, the numbers are phenomenal. So, this might be just like a thing I'm nitpicking with how I heard the call go, but the numbers were great. The issue with, I think, why the street has it down is because the CFO said many times, you guys felt that too, right? A lot of you guys saying defensive. Yeah. The CFO said many times, we are going to further increase our debt load to finance our demand-based CapEx. Now, the reason he's using that word demand-based CapEx is very intentional, right? He's trying to say, hey, the reason we're taking on more debt is because we have so much demand, which is fine. It's just at the end of the day, that might not be something that the street cares that much about, or that the street may want to see. Now, granted, they're taking on more debt, but they're 22 cents away from profitability. So the debt might not be the outstanding cause for why they don't continue to eventually get profitable. Coreweave right here down 5.7. The guide they gave, I don't think it was a bad guide. It was relatively decent. I don't know the exact numbers the street wanted, but from my understanding, it looks like they're beating on revenue. They might be missing a little bit on not EPS, but non-GAAP operating income. But that doesn't look like a horrible guide. Rocketlab still up 7% after hours, so it looks like that call is going okay, not really giving up that candle. Big Bear up 12%. Riggeti is flat, even after a pretty big miss, so Riggeti not having that much pain. And then TeraWolf's up 2%, even after a very large miss. Beyond Meat is down 5% after a bad EPS miss, a beat on revenue. Oxy's flat. Plug Power now goes red after a good beat. Coreweave is the one that's getting hit the most after hours, down 6.1%. So I guess the big thing tomorrow is Nebius. Yes, I'll be covering Nebius. I'm not going to be streaming it because it's during the market open. I'm sure there'll be another channel that's streaming it. We will go through the numbers. And, the thing about Nebius, again, I did my deep dive on them. I was saying this in the chat. I'm just a little concerned about these neoclouds not getting more deals. Nebius has been getting a lot of upgrades, though. Like a lot of upgrades. And I've been reading some of these reports. I think they got a $200 upgrade this morning. I forgot by who, but it was one of these firms. And every time I read the upgrade report, I look at my deep dive. I'm like, this is very similar to what I said in my deep dive in terms of the holistic perspective these analysts are taking on Nebius. Like the average price target right now in Nebius is 155 on the street. 40% upside from what we have currently right now. And there's only, 5 analysts, but still you are seeing, Northland Securities. They were the ones that were 206 and then D.A. Davidson gave them to 150. But then again, I don't know. I don't know if I know the business that well to say that before earnings, it's going to be okay. So I think we got to see. I also think, again, there's some hiccups in this data center debt financing issue. And the one thing the market doesn't want to hear about is debt for data centers. And Coreweave is explicitly saying we're happy to take on more debt because we have a ton of demand, which is fine. But I think the market doesn't love that at the moment, which could change tomorrow. I mean, these stocks are super volatile. Nebius right here, up a little bit after hours, 1.4%, as it continues to go green. So Nebius, Coreweave, Iren had a pretty good earnings. Coreweave, I think the numbers were good, even if the call wasn't the best. Iren right now after hours, that's up 1.6. CleanSpark getting decimated after diluting by $1 billion, back down to $14. Maybe the street doesn't care too much about it in a couple of weeks, but as of now, street's not the happiest. Opendoor up 3% after hours after the CEO tweeted he's going to be buying more stock. Rocketlab's up 7%. And you got Coreweave down 5.6. Yes, we should have Technical Tuesday tomorrow. I will confirm with Jason, but we should be live tomorrow for that. And after we cover the earnings, there's only a couple earnings tomorrow. Well, no, it's only Oklo. So we can get right into TT. ASTS, that one's flat, down about 0.66. They did put up $14 million in revenue. They missed on the top and the bottom, but they did say they're securing $1 billion of contracted revenue over the next year. There you go. That is what we got. Those are the earnings for today. This was the most, I guess you could say, intensive day on earnings. Thursday, you have Nubank, AMAT, RedCap. Wednesday, you have Cisco, Delo. Tomorrow, you have Oklo. So today was the big one. We got through it. And then, yes, AMD is going to be having the investor day tomorrow. I'm not going to be streaming that. I'm sure Jose will. I think that's probably going to be in the middle of the day. But hopefully, AMD says some good stuff. And they kind of have to say some stuff because, quite frankly, on the earnings call, they kept saying, we'll tell you guys at our investor day. Well, tomorrow's an important day then to then answer all those main questions. So that'll be important. I think that's what we got for today. We will have a daily recap. I know it's been gone for the past week. Usually when we have these tech earnings, it's almost impossible to do a recap because we're ending the day at around 8 p.m. with all these calls. But we'll be back today, the daily recap. I'll be live again at 9:30 tonight with Tanner and Roy. We're going to be recapping Robinhood earnings, Q3. Pretty good quarter. So we're going to talk about those earnings, probably get into a couple other topics. And then I'll be back tomorrow for the market open. And that's what we got. All right, folks. Thank you, everybody, for being here. Yes, Nebius tomorrow in the morning. I'll be live. We'll see what we got with Nebius. We'll keep going from there. And I think that's pretty much it. Again, regardless of some of these earnings moves after hours, we did have a really good day. And S&P 500 up 1.5%. Very nice to see 681.44. If we can continue that momentum, again, all-time highs are 689. We are not that far away. So if we could get there towards the end of the month, it would be very exciting. And obviously, NVIDIA is the next big catalyst that we got to watch out for over the coming weeks. All right, that's it. Thank you, everybody. Appreciate you all. See you guys in the deal recap, and then later today at 9:30 for Tech Bros. Bye, everybody. See you later. Have a good one.